First of all, I think that I'm absolutely convinced we need a diverse banking ecosystem. And that everything else being equal, regulation like Basel III is to the advantage of large institutions because the administrative burden and many, many things that we all know about, by definition, large banks have more means to cope with that. Now, everything else is not equal, and that everything else not equal is precisely proportionality. But I think we need to go further, and the way you asked the question, Sean, about comparing with the American system, I think can teach us something very interesting. Because as we know, the Americans don't apply Basel III to their less important banks. But at the same time, they have a very strict resolution system managed by the FDIC, and that has consequences. So I would argue that, yes, we do need proportionality in regulation because of the reasons I just gave, unless we believe that financial regulation is here to create distortions in competitions between banks. I don't think we believe that. So if we don't believe that, proportionality is a good idea, but it's not an idea that has no consequence. And the consequence of introducing proportionality is that we take more risk on the banks to which we apply proportionality. That means that the likelihood, everything else being equal, once again, likelihood that they might have a problem is bigger. And this is where I think that as much as I believe that proportionality in regulation is something that should be done, and of course we need to go into the detail, proportionality in resolution should not exist. Look at what the Americans do. When a bank has a problem, it goes into resolution, it goes into resolution. We all know that, this is not a resolution discussion, so, I don't think we have time to go into the detail, but we have a good rule book on resolutions in the EU. I mean, BRRD makes sense, and so we have a good rule book. But in a number of cases, we all have them in mind, it has not been applied. And it has not been applied for institutions, typically the Venetian banks who had a problem 2 and something years ago, because they were deemed to be less important from a systemic standpoint, then it was left to national authorities, and then they were recapitalized and bailed out. And then, on the 2 cases that we have in mind I'm referring to, the Italian taxpayer paid 17 billion euros of taxpayers' money to bail them out. So what I'm saying here is that in the EU, even though we have good rules, we have a number of loopholes in the application, which has had the consequence of not applying those resolution rules to those small banks. So yes, we should have proportionality in regulation, but no, we should not have proportionality in resolution. And I mean, Odile said, quoting you, Odile, small doesn't mean less risky. No, it's true. Smaller doesn't mean less risky. So, and we've seen so many cases where something can become systemic even though it started from being small. There's another dimension, but I might keep it for a second round, which is proportionality in supervision, which needs to be assessed more carefully.